This is what I also identified, that the accumulation of this information will be a challenging task. जो implementation है या इसको किस तरह से accumulate करना है, ये सारी problems तो होंगी. But this is what the law is at the moment. And that is what we all are debating, and that is what we have been representing to SCCP, कि इसकी practical implementation जो है वो almost it has become impossible for companies to accumulate such kind of data. But as we speak, this is what the Companies Act says, and this is what is required to be disclosed in the 4th and 5th schedule. So अभी हमने जो सुबह सुना बुशरा से कि they intend to delete this requirement of disclosing all the names of the related party in the financial statements. This she has confirmed. But from the ICAP forum, we will be writing, we have already drafted a letter which includes this related party and certain other matters as well. जिसमें include करता है ये beneficial owner जो 5% shareholding की बात हुई थी. So ये we will be again taking it up with SCP.
I just want to add on this related party difficulty. I think there is another way you can have a look at it, that there is a provision under the Act now that you can choose to prepare your financial statements in full compliance with the IFRS. Now, if you choose that framework, and now the Companies Act has, I think there's no particular accounting requirements which are emerging from the Companies Act, which means almost all the requirements in the IFRS are applicable even if you follow the Companies Act framework. So which means from accounting perspective already there are no major differences. So in which case if you follow the full IFRS or you adopt a full IFRS choice, then the related party definition that is in the IS 24 will be applicable to you, not the Companies Act definition. So if you choose that framework, you at least can get rid of the hassle of the disclosure. The other requirements of approving the related party transaction as per the definition in the Companies Act would still apply, but from a disclosure and from a financial statement perspective, I think there is a avenue available that can be explored.
Can we have a last question, please? Okay, we'll take two questions.
My name is Mohammad Mustafa Hassan. While briefing about associated undertaking, you have informed us that there is a rule whereby rules issued under repealed ordinance are safeguarded. Then again, while briefing about cost audit, we were informed that cost audits are no more required because the rules are no more available with us. Those rules are not safeguarded by that provision?
These are two entirely different contexts. One relates to associated undertaking. I said that not only for associated investment in associated undertaking, there is a section 509 which saves all the notifications, rules, regulations, exemptions previously issued by the SCCP, and those are not yet been replaced that remain applicable. So for investment in associated companies, there is one notification that gives list of the class of companies on which investment in associate restrictions does not apply. Then there is a specific regulation, investment in associated companies regulations introduced in January 2012, which gives a very detailed account of what to be done. So those regulations are still applicable, right? For the cost audit, this is now in the body of the law, and what it says is that the cost audit will only be applicable where the respective relevant regulator, and Bushra gave the example like for oil related companies, AGRA, if that regulator of those companies gives this order to have a cost audit, only then the company law will trigger and the cost audit will be done.
Last question. Assalamu alaikum. My name is Salman Hassan. I'm from Indus Motor Company Limited. My first question is regarding the related party transactions. Transactions which are conducted on the arm's length basis. So I just want to revalidate that those will be excluded from the transactions that are to be disclosed. And secondly, in the quarterly financial statements, do we have to disclose the all the list of related parties given the current scenario?
Uh, Let me respond to the second question that in the quarterly accounts, Amin has also explained that fourth and fifth schedules are applicable on the annual financial statement. So for quarterly financial statement, this requirement is not there. However, since this related party definition is in the body of the law, so accordingly for transactions to be reported in the financial statements, in the quarterly financial statement, the definition to be used will be the new one, as things stand, right? What's your second question? Okay, so transactions which are carried out on arm's length basis, for that there is no requirement to have a board policy. There is no requirement that if there are conflicting like interest of directors, you have to go. If it is to be proved that such transactions are on arm's length basis, then such restrictions are not applicable. Disclosures are emanating from the fourth and fifth schedule and IS 24 requirements. So wherever there is a requirement to disclose the name of related party or any other details which Amin has explained, so in that case you are required to disclose, otherwise not.
I think just to, I think that in the listing regulations, if I'm not wrong, there is a requirement that if the directors undertake a transaction on a non-arm length basis, they have to actually give a reason. You have to give reasons.
Reason for it.
So, so already, I think non-arm length transactions require a disclosure and a reason. So, it is difficult to imagine a company doing it and disclosing unless there is extreme situation that the transaction is on arm length basis and why it is in the interest of the company to do so. So, I would say practically it may not be a new requirement because all the law is saying if you are doing something on a regular basis in an arm length manner, so you need not to go specifically to the board for a policy or pricing of that transaction. And that requirement is already through the listing regulation is applicable because, and the code. So it requires disclosure already if you choose to do any transaction on a non-arm length basis. So it will be a very rare situation anyways.
I think on this, I think the key matter is that what will be the definition of arm's length, right? So in the Code of Corporate Governance, there is a particular mechanism. If I wear the hat of an auditor, I think this is going to be a very, very difficult situation that an auditor is going to comment even based on the existing requirements in the Code of Corporate Governance to give its opinion on whether it's an arm's length or basis or not. Because internationally, this is really the matter of discussion, and there are numerous cases where there have been disagreements about it's very, very difficult topic.
Normally close a question answer session. Now I would like to request Mr. Masood Naqvi to please close this session with his comments. Thank you, the panelists, for the questions. So please.
Bismillahirrahmanirrahim. President of the Institute, office bearers of the Council and the Regional Committee, past presidents who are here, and my friends, basically. I think it has been a very heavy day, and I just like the organizers in future to look at it, because we're starting at 10 o'clock and now finishing with the heavy technical stuff, actually. So I have sympathy with you, and for that reason I am shortening my address from about an hour and a half to hour, basically. Let me briefly talk about 2 or 3 things and I'll close. Important situation is that I give basically an alert to all who are in the auditing profession. Because all of you are aware that the risks to the auditors were increasing over a period of time. Yes, complacency on the part of the auditors was also increasing in a number of situations. I mean, the quality hasn't kept up with the situation as it should have. But the challenges which are coming now to the auditors all over the world and in Pakistan are basically very, very difficult, and I think it will create a lot of problems for the people if you do not keep yourself updated to the requirements of the law, and you seriously look at your audit procedures and audit methods which you are following. I think there will be a change. And please believe me, it's coming from a person who has been in this profession for 40 odd years or plus that. So I know what exactly is happening, where we stand, what's our quality, what's our level of the things, but the things are changing. On the one hand, we have got the external obligations. We are signing arrangements and declarations for OECD exchange of information. Automatic information is being required to be sent. How would it happen? One has to just see that. But we are coming into that arena. On the other hand, the good work has been done. It started as a very good work to look at the company's ordinance 1984 and review it, because it's been quite some time. And this is a dynamic situation. The business circumstances and environments are changing over the time, and that's why there is a need for the regulations and the regulators to keep pace with that and move accordingly with that situation. So it was a good initiative. They started this initiative, it carried on. If you look at the way the work has been done, it was very exhaustive. They have gone through number of exposures in number of countries, number of cities, and also going with number of institutions, trade bodies, Overseas Chamber of Commerce, Pakistan Business Council, ICAP, and the similar bodies. There were a lot of discussion and exposure which was taking place over a period of time. And at one stage, it was actually promulgated as an ordinance. Somehow that ordinance could be passed in the parliament, and then we had to go through the bill. So it's a commendable effort which was there. There are a lot of good things which have been brought about in the changes. But unfortunately, the situation is that a lot of feedback which actually came to SECP have not been properly heeded. It wasn't properly looked at. A lot of things would have been done differently if they would have looked at the comments and the feedback which they were getting on that. And the problem is very clear. The reason is number of provisions they have copy-pasted. Number of provisions they have brought in without looking at whether it's relevant from our point of view or it's not relevant from our point of view, whether we'll be able to implement or not. My question, and actually I did say to the finance minister and as well as the chairman who was there at that time, I did say that, look here, you are trying to do several things. You're saying we'll have this data room, this database, we'll have this thing done ourselves, we'll conduct the inquiries ourselves, we'll go and have the compromise arrangements done through the SCCP. Do you have the capacity to undertake a task like this? You don't have the capacity. We should recognize that we don't have the capacity. And that's why when we don't have the capacity, we'll not be able to implement it the way it should. And in terms of our regulations, if there is a sort of an implementation which is selective or which is done based on some other considerations, you will end up in a very big mess. And that's why I think there is a need still to look at it and move forward and change certain things which are required to be changed and have been discussed throughout the day. I'll not go into details of that. The good things like dispute resolution or mediation process is a very good thing. If that is followed by the corporate sector, there are a lot of litigations which could be resolved. As, for example, we were looking at FBR, and 75% of the litigation could easily be resolved because it has been there for the sake of it.